All right, guys, I guess Christmas came a little bit early this year. We're sitting really nice, just hit that $10,000 Robinhood portfolio, and I want to share every single stock that I hold. Right now, there's about 13 that make up my portfolio. And I want to cover a number of different things along the way. I've been getting a ton of different questions, new people coming to the channel, and I know that 94% of you guys aren't subscribed quite yet. So make sure that if you guys take anything away, you enjoy this content, you click that subscribe button, you turn on the bell notification. I talk about a ton of things investing. I share with you guys my tips, tricks, and insight into the stock market. So if you are looking to increase the size of your portfolio, then you might as well subscribe. But obviously in this video, like I said, you're going to cover the $10,000 portfolio. I'm going to go into a number of questions that I've been seeing on my channel from a lot of you guys out there. There's a lot of great questions that I've answered in previous videos, but I want to tie it all together, talk about my investment style, talk about why I love dividend investing. And then I'm also going to go as far into showing you guys the depth of the dividend payments coming in, so you get an overall standpoint of where I'm at with this $10,000 portfolio. So without further ado, let's just jump into the Robinhood app. All right, as you can see, we are sitting at $10,094.61. I had to make this video real quick. The stock market was dropping. You can see it went down to 10,022. So I was like, oh my God, I got to get on this, got to get this video done. Obviously, with the drop in the market, not too worried. This is a very long-term portfolio. If you know anything about me, you know that I'm holding these stocks, these ETFs that comprise in here for a very long time, hoping to get some passive income along the way. So over the past day, we're looking at a 0.75% drop. Over the past week, we're up 0.62%, $61. Over the past month, we're up $1,100, 12% gain. Over the past 3 months, we're up $500, a 5.22% gain. And over the past year, we're looking at a 9.61% gain of $884. So looking really, really solid so far. Some of the things about me as an investor, as I said, I'm a long-term investor. I focus on dividend stocks. Obviously, I stray away from that just a little bit, as I'll discuss with this portfolio. But what I do on this channel is I invest $100 every single week. I share with you guys everything going on in my mind when I make these moves. So it's a really, really great series to follow along with. And I've charted this entire portfolio, this entire journey since I started with the initial investment of, I believe, $1,000. So you literally could go back and watch every single video leading up to now if you actually wanted to. Scrolling down, I'm going to talk about each individual investment. And one person asked me in the last video why it seemed like some of my stocks were priced so much higher than on their screen. Well, the reason why is because I can sort my stocks differently than you have them. So you probably have it sorted by the last price here. And you can see if you look at it now, all the stock prices seem to be normal. But what I like to do is if you click on where the price is, the red symbol right here for me right now, the 36.93, if I click on that, you can sort by a number of different things. I like to sort by equity, and I put those stocks that I own the most of up front because those are what I like to see on a day-to-day basis. So I go by your equity, and you can see the very first highest equity investment that I have is $2,206.21, and that's in SPHD. So SPHD, if you didn't know, is a high dividend, low volatility ETF. And for this particular ETF, it plays really to my strengths as an investor and what I'm comfortable with, right? So I love dividends, but I also don't like when stocks, fluctuate a ton in value on a day-to-day basis. I like to invest and set and forget and not worry about them. So what this does is if the market were to dip, it shouldn't theoretically dip as low or as fast as the market is dipping. But if the market has a really, really great time and it skyrockets, it's not going to go up quite as high as what the market does. So for me as an investor, it represents more stability, a very stable baseline for my portfolio. And that's why a majority of my money goes straight into SPHD. People ask me as a beginning investor, if I had $1,000, what would I invest in? Well, for me personally, SPHD is a great option because of the reasons that I had just mentioned. And then on top of that, I would also say a total stock market index such as VTI, just to get aware of the market, understand how it works. But scrolling down here, you can see this position. I recently went positive on it. I'm up 2.61%. But the thing about this is you can see as I have dividends rolling in, this next dividend is $9.15 coming in. That happens every single month. So this is a monthly dividend paying ETF. And so you see that 2.61% up, that's pretty solid. If you take into account all the dividends I have been paid for this particular ETF, it should be up way higher because I'm able to capitalize on more money coming in. And then what I do with all of those dividend payments in this portfolio is reinvest them back into the same, stocks, companies, ETFs, what have have you. So let me go on to the next one here, Realty Income. This is my next biggest holding. Ironically, it's also monthly dividend paying, but this is a real estate investment trust. They have a lot of great companies that are basically renting their properties from them. They have big warehouse manufacturing buildings. They've got like FedEx as customers, Home Depot. They've got these places that are big name that really need retail locations. And here's the thing, the properties that they have, the buildings are all under 10 years old, which means, hey, that's less maintenance required. Basically, it's a lot better of a structure. And moving forward, you don't have to factor in a lot of those required maintenance costs. Now you can see again, this is one that I'm down around 6%, 5.64% on. But again, I'm getting those monthly dividend payments rolling in, and who knows, it probably has made up that $85 difference. I'm probably somewhere around even on Realty Income. A lot of people ask me in recent videos as well when I like to reinvest into some of these stocks. And I say whenever I'm down around 10% on these stocks, I like to double down. My methodology behind it is if I'm investing in Realty Income now at $60.83, I obviously see value in the company now. So if it drops to $50, don't you think that I should be loading up on that stock? Now, obviously you want to make sure you're doing research. If the company is going through a really bad time for a reason, then you're not going to want to invest in them. And you might actually want to consider closing out some positions if it doesn't look like they're going to get back on track. But for me, that's really what I do. That's the methodology behind it for me. So SPHD and Realty Income. Now Tesla, this is the only one in my portfolio right now that strays away from dividends. It doesn't pay a dividend, and I did it mainly for growth. Now, I personally invested in Tesla right after the stock split. And you notice when you invest, when you're an investor and you're open about your investments, there's a lot of things that people will have opinions on. And when I invested in them after the stock split, a lot of people commented, oh, that's not a great decision. Why would you invest in Tesla? They're way inflated in value. But the thing about Tesla is, yes, they're inflated right now. And yes, I believe that a lot of their valuation factors for the future. But with the stock market, that's kind of what you have to do in order to survive and thrive. So for Tesla, a lot of people were thinking, oh, that's a bad call. You should wait, whatever. But here's the thing. That investment, I'm up 26% on right now and climbing up $240. If I were to sell this investment, which I'm not going to, but if I were to sell this investment, I'd be able to capitalize on $240. Now that's pretty solid if you ask me. And honestly, I'm really happy with where I'm at with Tesla. And I'll likely invest more in Tesla in the future. And it's one of the stocks that I get the most questions about on my channel is Tesla, how I feel about it. Should people invest in it? Should they not invest in it? And first off, I'm not a financial advisor, so I can never say that, yeah, you should invest in this. And it's the only thing, this is where you need to put your money. I can't do that. That would be illegal. And I'm not trying to get in trouble with the law here. So, but for Tesla, my methodology around it is for that chance that they're able to continue innovating. And we've seen so much innovation already. They're such a great company. For that chance for their stock to even skyrocket further than this, which I think is very likely in the future, I might as well keep bolstering my position here. And worst case scenario, I'll keep my eye on them if things aren't looking good and they keep downturning. I mean, for a while, Tesla was operating negatively, and now obviously they're in the black, which means they're profiting and things are looking up for them. And I think it's going to continue this way. So it's one that I like to keep my eye on. I don't necessarily promote it all the time on my channel because it kind of goes against what I like to talk about. But again, Tesla, very solid. Next, I have Johnson & Johnson. I love Johnson & Johnson because they're so diversified. They've got a lot of different product lines. They're consumer products, they're pharmaceutical, they're kind of all across the board. Johnson & Johnson's very solid. Overall, I'm down 5.43, but again, I get dividends from them, and that definitely has made up that difference and then some. So Johnson & Johnson's very solid. Coca-Cola, one of Warren Buffett's very favorites. Didn't realize it was on such a big dip today. I wonder what the reason is behind that. I looked that up, but could be a good time to invest in it. I don't know. I'm up 5% on them right now, $35. Obviously getting those dividends rolling in, and I'm going to talk about all the dividends and give you guys an overview in a few minutes here. Again, scrolling down, I have Apple. This one doesn't pay as high of a dividend as others. It's more of a growth stock again, but Apple is very solid. Again, invested in them after the stock split, and it's still looking pretty good for me, up $83, 13% there. AT&T, this is one that I'm keeping my eye on closely right now. Things aren't looking great for their company, but I'm not ready to close out my position quite yet. It might represent a good time to buy and kind of bolster some positions in hopes hopes that they can reform what they're doing in the future, get some great management down, and be able to bounce back. But if you look at their chart right now, they've been trending downwards. Their dividend is really, really high. It's relatively safe for a dividend, I feel like, for right now, but who's to say that couldn't change in the future. Down $53 on them. I believe this is one of my higher ones that I'm down on, and love getting that dividend income rolling in from them. Now, Abby is one that I actually picked up more today. I think, $100 is a solid buy-in for me right now around this. So my average cost is $100.37. You can see I'm up $20 on them. Obviously, like I said, I kind of went into them today, sold off some other positions on stocks that weren't dividend paying because I want this portfolio really to be focused on that dividend aspect. Now, scrolling down just a little bit, Microsoft is one of the best trades that I have made, even though I only own 2 shares of them. As I scroll down, you can see my my average cost is $166, and right now I'm up around 30%, making $115 if I were to sell it today. Microsoft is one that I look to hold for the future. Sony is another great option for a stock like this. I think they're going to do extremely well with the PS5 coming out. It'll be interesting to keep your eye on the console war there. Next, I have Pfizer. A lot of great stuff coming out with Pfizer, especially around the COVID vaccine. It's looking pretty promising. Like, they have a 95% rating for their new vaccine for the COVID-19 pandemic, and hopefully, they roll that out. I think there's a lot of opportunity for this stock to grow if that is the vaccine of choice. So it looks like if you kind of look over the past week, there's some rallying going on. It'll be interesting to see where this heads, and I just figured, I might as well bolster up a little bit there. Right now, I'm up around 3%, $14. This is definitely going to be one that you'll want to keep your eye on moving forward. Now, the next thing is VTI. I mentioned that earlier in this video. If you're brand new, VTI is what one of my very first investments that I ever made in a different portfolio, and it just kind of allows you to get used to the market. This one in particular, I'm up at 9.32%. Really interesting. I believe at one point in time, I was down around 20-30% on this because of when the pandemic hit, all of the stock market dropped. Nothing was looking too solid, and obviously since then we're pretty much hitting all-time highs, and it's looking decent. So VTI, very, very solid. Next, I have Ford. Ford is one that is also a little bit risky. I think the EV market, the electric vehicle market, is really going to take off. Ford has introduced some lines to that, so it'll be interesting to see where Ford heads. But as of right now, when I bought into this, I just saw it as a really great opportunity to get Ford at a low cost at $6.65, and then not too long after, they started announcing a little bit of the EV stuff going on. So we're looking at 36% up right there, $73. That's one of my favorites right now for one of the stock moves that I made and getting that quick return. But obviously, I'm not looking for that quick return. It's more of a long term for this portfolio. So the last thing that I am holding here is McDonald's, and if I drill into McDonald's, I bought them around $200, what I think is a solid buy, and I'm likely to get more if this continues to drop down to that $200 value. So that's kind of my price target, but you can see they're kind of fluctuating here and there, and I don't know. I mean, when I bought in, they dropped all the way down to $150. Obviously, I wish that I could have kept bolstering my position there, and I just didn't have the capital. A lot of it is having cash on hand, which I am very cash heavy right now, saving for a down payment on a house. I don't know when that's going to happen. Kind of the whole pandemic has pushed that stuff away from this channel for a little bit for the time being, but let me jump into where I actually track my dividend payments for you guys. I have some really great stuff on this website. All right, now this is TrackYourDividends.com. This is a really solid free resource that you can use. They also have a paid portion for this website, but TrackYourDividends.com, I think you can get a lot out of it from the free section. Now, let me just cover the portfolio here. You can see the value is $10,258. Their website updates every, I believe, 2 hours. So it's not representative of where I'm at in the Robinhood portfolio, but this is all the stocks that I own. This is everything in that portfolio making it up. So I just want to talk a little bit about it. You can see my dividend yield in the portfolio is 3.3%. The yield on cost is 3.49%. And the annual income from this is $339. So really, really cool. I'd love to see the annual income in my portfolio grow from $339 to around $1,000 by the end of 2021. So I know I'll have to put a lot more money into this, but that's something that I'm willing to work towards to just kind of wrap up the year there. So really, really solid stuff here. You can see all of the shares that I own. This is a really intuitive platform that you can use. If you ever buy more, you can click edit and just adjust the shares and the price, the average cost that you have in it. But this is really, really solid for looking at your dividends when they're rolling in. And that's exactly what I love to use it for. There's a lot of different things you can do here. But if you go into like the upcoming dividends here and I click on the summary tab, you're going to see some really solid stuff, visualization, which is what I really like about this platform too. So let's see what happens when this loads. So you can see right here, this has been increasing, and obviously this changes with every holding that I add to my portfolio. Even the slightest tweak is going to give me a little bit more dividend income as long as I'm investing in dividend companies. So you can see the dividend income I'm projected in December is going to be $27.44. Really love the representation on these graphs, and the most that I'll get in 2021 looks to be in about May, where I'll get $36.20. Really cool. Every time that I add a stock, anytime I buy a dividend stock, it goes right into this chart. It gets added in, and basically I can see, hey, you know what, where can I see my estimated revenue coming in, which is really cool for me. And then the way I like to look at the dividend payments, so this $27.44, I think, you know, what does this pay for in my life? I can literally get a Netflix subscription, a Hulu subscription, pay for, you know, Amazon Prime, whatever, with just dividend income. Now, I don't do that. I reinvest it as I mentioned, but it's just really cool to think about all of the stuff that eventually I'll be able to use this dividend income for. And the overall end goal is to be able to have your dividends cover all of your living expenses. That way you can really be part of that FIRE movement, retire early. You don't need to worry about your expenses, and you can really do whatever you want with your life. Now, I don't see myself really ever retiring, so to speak, but I see myself, you know, doing the things that I really like to do. It'll just be interesting to see how long it takes me to get there. I mean, you need a lot of money in your portfolio to be able to cover all of your living expenses. And that's why I'm trying to supplement in some real estate investing as well. All right, so that's really what I got for you guys in this video here today. If you did enjoy it at all, you learned anything, you took anything away from it, click that like button. It helps promote my channel, puts it on the homepage for other people, gets more viewers. And again, it really means so much. Any support, it just gives me a little bit of that gratification towards making these videos. And if you like what you're seeing, obviously I'm going to keep putting out this content. So thank you so much for checking out this video. Again, like and subscribe. 94% of you unsubscribed. I'd love to see that rate go down. Thank you so much for checking out this video. Have a great day.